future trends, deep insights, industry leaders. This is the iGaming Next podcast with your host, Pierre Lindh.
Good afternoon, Paul. How are you doing? Welcome back to the podcast.
Good afternoon. Very well, thank you. How are you?
Very well as well, thank you. It's been a couple of interesting days here leading up to the quarterly report here of Evolution. Recently, I've been kind of following the forums, following what the investors have been saying, and hasn't really been a consensus of what this report was going to bring. So I think a lot of people were on edge for the quarterly report this time, and just as a starting point here, perhaps, Paul, it'd be really interesting to just hear. I saw that you sent out your newsletter, Regulus, through Regulus this morning, so I read it. But it would be really interesting to hear your analysis of the Evolution quarterly report here as a starting point. What did you learn so far, you think?
Yeah, sure. Well, it's unsurprising, I think, that there is a lack of consensus, because there's kind of something for everyone in the report. So the broad headline figures of revenue doubling look really good, but then when you dig into that, you realize that it's not pro forma. That is because NetEnt is consolidated this year but not last year. So the underlying growth, the important growth figure, is 41% year on year, which sounds good. You can't be too disappointed with 41% growth, particularly given that Q2 last year was already largely a lockdown quarter for many markets, and therefore the comps are tough for everybody. But then peeling back that headline figure, again, you get a view that won't surprise anybody. NetEnt hasn't been owned for very long. It therefore hasn't been turned around yet. It therefore saw 2% decline year on year. And then Live, which is still the key powerhouse product that still has some strong momentum behind it, was up 59%. And that's how you get to the 41. So far, no surprises. But I think the really important splits that have been provided are the geographic splits rather than the overall growth, or how RNG is performing versus Live. And what you can see there quarter on quarter, which is a like-for-like figure calculated throughout the entire period, is flat performance in Europe, which is fine. There are some reasons for it being flat. There's maturity. There is the Euros occurred, which is going to impact recycling into gaming negatively, particularly given the number of draws. So that we don't need to be too worried about flat. There's also some pressure from Germany, and there's some regulatory pressure from the UK and Nordics. But nevertheless, flat quarter on quarter is not strong growth by any stretch of the imagination. However, strong growth quarter on quarter can be seen from North America. And it can be seen was up 26% quarter on quarter, which is very, very strong on an annualizing basis. And a similar rate of growth could be seen from Asia and other. So what we're seeing, therefore, is a bifurcation of growth around market maturity. Core European markets, which still represent about 55% of the overall business, are becoming increasingly challenging markets, whereas you've got much stronger growth in the periphery, which is also now making up an increasingly large proportion of the overall business. Now, the problem with that, or the potential issue with that, is that growth coming from Asian and other markets is overwhelmingly not regulated, or not domestically regulated, whereas growth coming from North America, excluding Canada at the moment, is overwhelmingly regulated and potentially quite tightly regulated. So it's going to be very interesting to see in a few months and a few years' time how that plays out, with the historical growth engine of Evolution and NetEnt stalling, but new growth engines taking over very successfully from a strategic and commercial standpoint, but with polar opposite regulatory risk exposure. Now, that could be good, because actually, if the two issues don't cross-fertilize, cross-contaminate each other than having some high margin, high growth .com revenue and also some North American growth, which is particularly good for revenue multiples, is a good thing. The danger is if the .com growth starts to threaten the regulatory safety of the North American revenue, given that North American regulators tend to look closely at what suppliers do elsewhere than the USA.
Right. And about a month ago, there was a research report that was published by the Hindenburg Research Institute, basically targeting DraftKings and the potential nefarious revenue that is being drawn from I lose the name, SPTech, which was their acquisition they made a while ago. And interestingly enough, the share price of DraftKings were not affected. They declined during the day of the report, and then it recovered. However, Evolution, on the other hand, was quite severely affected here. And I think a lot of investors, a lot of media attributed this drop in share price to the Maltese news, essentially that Malta was grey-listed and also a potential increase in corporate tax. However, the institutional investors that I've been talking to are much more aware and worried, let's say, of these revenues coming from grey and black markets. What do you think? What do you think? Is it justified, so to say, that the institutional investors, the investors general, are worried about the Asian revenues that are seemingly the biggest growth markets of Evolution at the moment, mm-hmm. Or is it a knee-jerk reaction? Let's say
it's complicated, inevitably. So I think the problem with the Hindenburg approach is it attempted to oversimplify some very complicated issues. And without going into specifically what Hindenburg had to say and focusing on what we would have to say, it is this, that there are essentially two layers of important regulatory complexity that sit within .com markets and then may percolate through to regulated markets. The first and most obvious is to what extent might these markets undergo regulatory change, either by banning or restricting products or by more aggressively enforcing existing legislation and regulation. We've seen it, for example, in Norway. We see it increasingly in China, but affecting different companies in different ways. So there is a threat. Now, this is where I think investors can be kind of relaxed by saying that this is why you need a portfolio. This is why we understand that you can't just draw a straight line of growth and say that, hey, everything's going to be all right forever. And growth is a great mitigator of individual country risk. So a portfolio of regulatory risk is sensible. And so long as you manage that risk so that you are not explicitly breaking any laws, and so long as that you are not putting all of your eggs in too few baskets so that one change has a huge impact on your overall business, then it's fine, and you take the rough with the smooth. It's difficult to have a high margin, low tax environment that generates 25% quarter on quarter growth that doesn't come with some sort of risk. So in that context, I think a sensible attitude to risk is broadly present in the market. The complexity comes, though, when the operating practices to mine the revenue within the markets in question invite operators and, to a far lesser extent, suppliers to do things that might be considered dodgy in other ways, especially around payment processing. So in that context, the risk is far more nuanced and far less visible. So I think, broadly speaking, the market has a good handle on the idea that governments might change their view on gambling or change their enforcement of gambling, and that is something that is a perennial risk within the sector. What is more complicated is this operational layer and the dark arts of mining .com revenue. Now, there is an extent to which companies like Evolution in particular are insulated against this or have mitigating factors because they are not themselves operators, and they're not a business like Playtech, which gets heavily involved in the operations management of licensees.
Right.
So it's not just a case of saying, hey, we're B2B. It's how are you B2B? If you're content only, then you're a couple of steps removed from coalface. So then it's more a question of to what extent have you got operational risk within your licensee base, or to what extent does knowledge and supporting these licensees potentially come back to bite you? And this is where I think there's a potentially interesting political play to unfold. Because if you look at, Scientific Games is a great example of a company which says, hey, look, we've assembled all these assets. We do all these cool things in digital. US is opening up. What could possibly go wrong? Well, now they're breaking up.
Yeah.
So clearly things were going wrong. So now there's a lot of elements of those breakup sort of contingencies which are positive. But one of the things which is a glaring gap in US businesses is live. And this is why Evolution has got such incredible market share in North America as well as in Europe, and is growing its market share in Asia. It's because it lacks a strong competitor. Now, there are a couple of things that these US companies might do, whether there are three. One is go buy it, but Evolution is kind of off the charts in terms of a viable acquisition. So then you say, well, am I going to go and buy something an awful lot smaller, less fully formed, and try to deliver growth that way? Well, maybe deliver it organically. But one of the tried and tested playbooks of US regulated operators is to cause trouble at the regulatory layer by saying, hey, the reason why we don't have these products and services for our clients is because we've not been able to do it, because here we are obeying all the rules, and here are these other companies who aren't obeying all the rules. Now, this is something that hasn't really played out yet. Mud has been thrown. Not much of it is stuck. But there's an interesting question around, is there a critical mass of mud before it sticks? Does the lobbying power become more effective over time? Do regulators start to become more uncomfortable over time? These are questions that I think can shape the dynamics between US and .com markets, which haven't played out yet. And one of the things that we always say to people, and it's a bit like, what the guy tells you when you're getting married, of, this is the beginning of a journey. It's not the end of one. It all feels exciting now, but you've got, 80 years of strife and difficulty ahead of you that you've got to work hard at. Well, being a regulated operator is a little bit like that. Getting your license in a new market, in an exciting growth market, feels like a massive milestone achievement, and hey, we've done it, now we can make money. Well, actually, your relationship with your regulator is a constant and evolving one. Right. And the fact that you are regulated is not a sort of an open door. It's a state of being. So everything that is always occurring globally that might be impacting your business, as well as regionally in the jurisdiction where you're regulated, outside some of the light touch regulations in Europe, are really important and don't go away. So the evolving regulatory landscape in the US and elsewhere in the US is unfinished business. It's still an untold story with an unknown ending. The fact that you've got .com revenue and a US license, and the fact that that is okay now, doesn't mean it's always going to be okay in all circumstances.
Right.
Sorry.
That's a very interesting point that you're making, and in a sense, you could say that the future of evolution is very much at the helm of and at the mercy of the regulators in the US, for example, being lenient, continuing to be lenient with the fact that evolution directly or indirectly is deriving revenue from .com unregulated operators, essentially, even though they work with layers in between with aggregators and so on. So what at the same time you would think that in the US previously, historically, they've had the land-based casinos have very much been lobbying against online. However, it's now obviously all the major players have now kind of jumped onto the boat, let's say, on the online ship, and it's very much working for the legislation in more and more states. So it begs the question, though: is there anything that is working against evolution in the continued kind of opening up of the U.S. states? At the moment, there's only 4 states, I believe, where they're operating with the online with the live segment, but obviously hoping more to come.
Yep.
What's your feeling?
So I think there's a couple of dynamics there. That the first one, the one that you've touched on explicitly, is how many more states will adopt online gaming. Well, right. Undoubtedly there will be some, but we would hate to call what and when. It's far more complicated, far more politically fraught than sports betting, and so it's not a given by any stretch of the imagination. No. In fact, for our internal models and the modeling we do for our clients, we say, look, you can have a reasonable view of modeling out sports betting, or whether it's going to be land-based or online or a mixture or however that might play out. And so you can have a reasonable roadmap of states that you think might adopt some form of sports betting at some point over time. Modeling out states which could adopt gaming can be done commercially. You can say, well, if the state does it like this, then it will be about this big. But actually saying, and we think this is likely, is in our view, still a step too far. Online gaming states are bankers when they arrive, but they're not something to look forward to with any degree of certainty.
Yeah, it seems very difficult to predict. Essentially,
it's very dare I say it's very easy to be bearish. It's very difficult to be bullish. Right. And because people want to be bullish, they say, well, therefore it's difficult. Well, actually, no, it's simple. Assume it's not going to happen. And then if it does happen, it's a bonus. A bonus is another important point to flag here. The underlying position of US states in terms of gaming is considerably more complex than the GGR figures that the states put out. Pennsylvania gives a really clear view because that provides NGR. The other states include bonuses. Bonus rates in the US are through the roof, and therefore it's actually quite complicated to work out from headline figures where the market really is, and we spend a lot of time and effort doing that. That said, it's still a great place for evolution to be. There's clearly strong growth. We do think, and even Michigan reinforces rather than challenges this, we do think that what we're seeing in the US is rapid maturity, not necessarily a different paradigm of growth to what we see in Europe. Now, the US naturally has a stronger online gaming market than sports betting, because US sports betting is quite constricted in terms of product. There just isn't much of it, whereas gaming doesn't have that problem. And that's why whereas in Europe you tend to see a 45-55 split between betting and gaming, in the US it's more like 30-70. So being positioned in online gaming where it's allowed is great. It's a question of where it's being allowed. Now, the two follow-on dynamics from that are, number one, to what extent does competition become more pronounced for Evolution's portfolio of assets? Because they've got a great run at it at the moment. And so if you see competition increasing, combined with increasing maturity especially post-COVID, in the core markets that have been legislated, then you can see some pressure. But there's a lot of tailwinds to mitigate those headwinds. So we wouldn't see that as bearish, merely as cautionary. The more interesting question is this point about the US effectively has gone through. It's a bit like when the US goes to war late. Then it goes to war completely unprepared. God, we need some European help here to give us an idea of what we're going to do while we scale up an army of 30,000 men to an army of 5 million men. Then when they've got an army of 5 million men, they say, we're not doing what Europe wants. Why would we do that? We'll do what we want. And I think we're still in that phase where European help, European know-how is strategic rather than operationally required. As the US gains scale, that requirement drops from being strategic and becomes operational. And as it gains in scale and capability, the requirement stops being operational and becomes tactical, i.e. you hire the suppliers you need, you hire the people you need, but you don't need to think, where is our European framework within our delivery system? So I still think that's kind of where we are in the paradigm at the moment. Now, that's not to say, therefore, evolution gets squeezed out. It doesn't. Evolution is developing boots on the ground in America to make it part of a critical delivery system in the US. So we don't see that necessarily as a threat, but we do see it starting to transform the commercial and also the regulatory dynamics. So look at it like this. While a critical mass of US operators need the European supply chain and European know-how, they're not going to set fire to that regulatory framework. When they don't need it, they potentially become not just expendable, but useful to remove.
I see.
And that then changes the regulatory dynamic potentially. That's not a prediction. We're not saying that's going to happen and it's all going to be a disaster. We're simply saying that where we are in the evolution, as it were, of where the US is, if a threat is to emerge against European operators and suppliers, it would not have happened yet, even if it's going to.
Right. That's a good point. So the expectation that the US market is going to be a 50 billion market, and it's going to be a clear kind of line for evolution to grow together with the market share is not necessarily that straightforward as it may sound. Let's say there are other dynamics at play here. But Paul, just a larger question. I mean, seemingly, from the outside, evolution have everything going for them at the moment. They don't have a clear emerging competitor. Still in the last quarter, the US is growing handsomely. What do you think could disrupt evolution? You mentioned here, obviously, regulatory hassles, for example. But do you see any clear indications or any clear potential disruptors of evolution as a company and its position in the market? Could it be, for example, other operators who wants to control their own supply chain, for example? Where do you see the risk in the company?
I think a lot of it is kind of basic economics playing out over time. So as things stand at the moment, evolution is the obvious choice for live dealer of scale and quality pointing toward the West. It has competitors, but they're not peer competitors. Now, given the amount of money that's at play here, and given the margins that evolution is able to charge and then see drop through to its bottom line, which is very visible, a combination of improving competitor B2B capability and questions over whether or not some of the largest operators should start taking some of their live capability in-house must start to play on that addressable market and also the margins that can be achieved from it. Now, it's a little bit like other markets that have strong barriers to success, though. A material number of suppliers, including NetEnt, have had a go, but it's really hard to do. The thing is, though, when an operator gets it or a supplier gets it, then things can move quite quickly. So a really good example of that is in the early days of poker. It looked like Party was going to win the liquidity race as a brand,
right.
and indeed it briefly did, until the PokerStars guys came along and showed them how to run a poker company. Yeah. PokerStars has then had it pretty easy until relatively recently, when NSUS GG has come along and eaten their lunch.
Very interesting dynamics there.
So in 2012, in 2014, in 2016, you could predict as a logical economic theory that somebody could come along and challenge PokerStars liquidity. And maybe that would be Asian liquidity that initially kickstarted it, because that was the gap on the map.
That's where GG were strong, exactly. They took the Asian side. Yeah, that's right.
It's taken till now for it to happen, but it's happened. These things are glacial until they're quick, because of the barriers to success. A little bit like Betfair's stranglehold on liquidity to start with. So do we know when and how, or even with any certainty whether Evolution's grip on live will be broken? No. But when it happens, should it happen, then nobody's going to say, well, gosh, that was extraordinarily surprising. We thought that would last forever. Because nothing does.
Nothing lasts forever. Nothing lasts forever in the end of the day. So you know, the live product is obviously one part of Evolution's revenues, which is the good news. Let's say that it's continuing to grow so rapidly. On the RNG side, however, it's NetEnt and Red Tiger are continuing to publish stagnant reports as well. They like you mentioned, they decreased revenue 2% year on year, and it's been fairly stagnant, fairly non-moving in the last 4 or 5 quarters. Do you think that Evolution is? I think Martin Carlson in the report, he mentioned that they are kind of reshuffling the teams, they are getting up to speed, but you must wonder that they must be a bit disappointed in how the revenues are evolving here. What do you think, Paul? What does it take for them to?
I don't think
it's a different market, right?
This is turning a tanker. You can't own a content business with a big library and a really established market position, and in a couple of quarters say, "Hey, we turned it round."
Yeah,
because the market positioning of NetEnt and Red Tiger. Here's an important caveat, though: the impact of BTG has not yet been seen, either in terms of being consolidated within the numbers, or far more importantly, what that then does to the NetEnt and Red Tiger library. My personal view is that the trading results for the balance of this year for NetEnt and Red Tiger are an irrelevance, because it's a legacy figure. It's what was inherited. I mean, certainly on the cost base, things are starting to move, but that's not what really matters. What really matters is starting to produce premium content again, and therefore starting to win market share again. And whatever plans that may be in place, even if they're foot perfect plans that are going to see no execution bumps in the road at all, would not have started to move the dial yet.
Right. I mean, there's another perspective here as well from the operator's point of view, as Evolution is now consolidating more brands into the organizations. Operators are quite exposed to one single supplier here, and we've seen kind of a trend towards operators wanting to control their own content in a sense. Kindred obviously buying Relax here a couple of weeks ago. And what I'm hearing, just the word on the street, is that a lot of operators are worried that 60, 70, 75% of their revenue is coming from one supplier who they are now at the mercy of, let's say. Do you think that could potentially be a threat to Evolution as well, that the trend is heading towards more in-house control of the content? Also, Entain obviously increasing their content team. And
Yep. I think to an extent, yes, it goes back to that point of sort of the remorseless logic of economics over time, overlaid with what actually is the catalyst. Because it's a brave business that says, right, we're going to do our own in-house live, and we're gonna switch off Evolution, and it's all going to be fine. So it's likely to happen over time. There will be new customer opportunities mitigating that. There will be market growth mitigating that. But you can see a pathway, just as you can see a pathway for continued strong growth. You can see a pathway of much greater levels of maturity in core markets, which starts putting pressure on prices. It means that winning businesses in the long tail are far less important than potentially losing business or losing contracting pricing power for the major operators. And therefore you start increasingly needing the US and or Asia to cover a whole rather than supplement growth. And
Right.
that's a different dynamic to what we're seeing at the moment.
Yeah, right. And another question here as well is, I get the feeling as well that pragmatic play is kind of emerging as a bit of a needle in the eye, let's say, and they are almost emerging as the competitor to Evolution, you could say, although they are a lot smaller now. However, as far as I know, I heard that Pragmatic internally are reaching crazy targets right now. They are growing exponentially at the moment. Do you think that is something Evolution should be worried about, keeping an eye on?
Yeah, I mean, looking at another way round. Given the way in which certain corporate cultures have evolved and behaved, if you're Evolution and you're looking at your competitor landscape, you're probably broadly relaxed that Playtech is your competitor, because you know that you can win on quality.
Yeah.
Albeit Playtech kinds of gets there in the end, and they'll always have a go at the direct competitive approach, which is annoying. You're very relaxed when NetEnt says, "Hey, we're going to have a go at this," because go for it, knock yourselves out, waste some money.
Yeah.
You're not going to be that relaxed when Pragmatic says we're going to have a go.
Exactly. The hungry team, up and coming. I mean, producing really great content, doing everything right by the sounds of it. And also with the institutional investors that we talked to, they raised this question as well. What about Pragmatic? They seem to be emerging as the needle in the eye here.
Well, one of the things that is also quite significant and important in terms of how this all plays out is that until a few years ago, there were only a small handful of very large content providers. And you could see where they were and what they were doing. And in order to take on Evolution with any credibility, you need a lot of scale, a lot of resource, and a lot of contracts, a lot of clients to be able to sell into. Trying to do this from a standing start with a small studio base is going to be really, really hard without a proper anchor tenant, and that becomes a vicious circle. So if you look at the potential competitors, you might say, well, where was microgaming in all of this?
Yes, that's a good question.
But then you start running out of where was Scientific Games in all of this? Yeah, well, their execution capability has been mixed. IGT, worse than mixed.
Yeah.
So consequently, you look at the big beast. Novomatic had a go, and that's kind of now where Pragmatic has come from in terms of their own live capability. So you look at the list of potential real live competitors to Evolution, and they bought one as well. So, and you start thinking, yes, you can see this remorseless potential tide of economics going wrong for them, but where's the catalyst? And that's the critical point. And maybe Pragmatic, or maybe how another interesting dynamic here is how Asian-facing businesses want to try to reposition, given the pressure on the Philippines, the pressure on Cambodia. So there are now, and again, maybe just with hindsight, this will look obvious, but we're now starting to see some of those operational and commercial catalysts that create credible competition outside of the why didn't these guys see live and deliver it when they could.
There's a lot of dynamics in play at the same time here. That's clear. But I mean, taking a step back, I mean, now we are being quite critical, asking critical questions. I think it's important, but it's also important to remember that they did just publish 115% EBITDA growth year on year. Incredible numbers, obviously, on the live side. They are continuing to exponentially grow, but the difficulty perhaps will be to dramatically increase the market share on the RNG side. At the end of the day, that is going to be the biggest challenge, I would assume, just because of the competition in itself. There's just so many more content providers on that side.
Let me give you the counter view of that. I think the opposite is true.
Right.
So I think that the scale and pace of growth of live dealer in Europe has been so strong that it is now almost inevitably running out of steam, because there just isn't enough RNG market to take. It's now having to grow the segment rather than just grow share within the segment, which is much tougher. Even with great product and great focus on the product, which Evolution brings, it's way tougher to grow roulette, blackjack, etc., than it is to just do a better roulette, blackjack product than what's already out there and gobble up that historical RNG pie. So the market share dynamics in live are much more difficult now. And hence you're seeing much more growth in the US, which is a special situation, and in Asia, which has got a massive live dealer business already, but changing consumer dynamics and changing licensee dynamics within Asia as well. I mean, look at Gamesys, for example, in Japan. So live, actually, you can see the dynamics changing profoundly away from market share growth within an easy open door segment push, live gobbling up RNG and Evolution ahead of the pack, to much more complicated geographical peripheries, much more complicated maturity profiles, and an ever more complicated commercial and regulatory profile. Whereas there is a much more fragmented content market out there where NetEnt has been chronically underperforming, just about shored itself up by buying its obvious, cannibalizing competitor in Red Tiger, and there's now potentially got a sprinkling of magic dust with BTG, which we haven't seen in action yet, and may yet do other deals. So actually, we're now seeing the RNG side at its dullest, at its least inspired, demonstrating that all the guff that NetEnt was talking about, that it had achieved some sort of turnaround, was nonsense. But that's not to say that turnaround can't be achieved under new ownership. Exactly. So I think that there is much more existing addressable market in RNG content that Evolution can go for. Evolution does not have to reinvent the world of gambling in order to significantly improve the amount of money it's making from RNG. Whereas increasingly it does have to reinvent the world of gambling.
Right. So unfortunately, Paul is sitting on a bit of an unstable Wi-Fi connection in the British countryside, so he managed to drop out. But to wrap up this discussion, essentially what Paul is saying that it's very, very strong numbers published by Evolution. However, there are some question marks, let's say, on the future growth potential in the US, which is a little bit outside of Evolution's control. What are the regulators? How are they going to act? Are more states going to open up in the US for live casino? The question marks surrounding Asia growth and taking revenue from .com operators, and how that can play out with regulators in the US perhaps, or even Europe. So there are some things to look out for, in other words. But one can't deny, of course, that the numbers overall in the report are very, very strong. 59% growth year on year on the live segment. Is Evolution just goes from strength to strength. NetEnt Red Tiger is still lackluster results, but Paul is making the argument that is actually where the revenue potential is. The revenues aren't necessarily going to increase straight away after an acquisition, but Paul is saying if anyone can do it, it would be Evolution. So it'll be interesting to see now that Big Time Gaming is in the mix, how this is going to affect revenue in the third quarter and onwards. Obviously, Evolution has bar none the strongest product team in the industry, led by Todd Haushalter, but they now also get this second legend of the industry, Nick Robinson of B2G, who will now work together to create even more incredible games as we move forward. So all in all, very interesting report. It was very difficult to discern if this was a good or if this was a bad report before markets opened this morning. And as in the recording of this interview, we can now see that the share price have moved up 2.6%. So it's been fairly flat, and considering that Evolution lost about 3% of its share price yesterday, you could say that this quarterly report didn't move the needle so far, at least, but who knows what will happen after this interview is published. So with that, I'd like to thank Paul again for coming on to bring on board his research. I would like to recommend everyone as well to sign up for the Regulus email newsletter. It's an absolutely excellent newsletter that Paul is in charge of, and he sends regular updates whenever there are interesting movements in the market, as he did today when the Evolution's report was published. And so you can keep yourself updated. I regularly quote his newsletter, so I definitely recommend you all to check that out. And with that, wish you all a great day and see you soon. Thank you, everyone.